Hey everyone, recently I received multiple requests to cover Borosil Renewables. It's the largest solar glass manufacturer in India, and considering the fact that solar power is one of the most promising sector, it's natural to have interest in Borosil Renewables. Now if you look at the share price journey in last 5 years, it's been a roller coaster ride. Its share price consolidated before COVID and then fell down sharply. However, it generated nearly 20 times return during COVID bull rally, and then the share price corrected nearly 50% over the next 18 months. However, there is again a sharp rally in the company recently. So in this video, I'll help you understand the reason behind 20 times return during COVID and why its share price corrected around 50% after the rally. Moreover, I'll help you understand what can be expected from the company in the near future so that you can take an informed decision in terms of whether to buy the share or avoid it. And if you're already holding it, then whether it is worth accumulating more or worth selling it or just hold it. But before that, let me clarify that it is not a buy or sell call. The idea is to share my knowledge with you all. You might watch YouTube videos or follow advice of various people from different platforms, but ultimately only you have to decide what to buy and what to sell. And that's why I've been saying that from day one, that you need to learn how to analyze a company and then take investment decisions. These videos can only give you a direction with required knowledge, but can't help you with your investment. That's only your decision. And it's applicable for everyone you follow, not just me. Let me be very honest about it. Time and again I see comments like, can we buy a share or can we sell it? Friends, I don't give buy sell call because that's not the right way to invest your money. I've been against stock tips from day one. I only share knowledge. At the end of the day, you need to learn how to consume it and then build your own thought process with proper research. So yeah, if you are watching this video just to get stock tip, please don't watch it. Alright, let's get started. First of all, let's try to understand the business model of Borosil Renewable. As you can see on the screen, it's part of Borosil Group that has more than 60 years of experience. Borosil Group has two entities, Borosil Renewable and Borosil Limited. Borosil Renewable is India's largest solar glass manufacturer. Company has worldwide presence across India, Europe, North America, South America, Russia, with around 25% revenue coming from export. Now this slide gives a good picture of share of solar in renewable energy. Total installed power generation capacity in India is 425 gigawatt as of September 23. Out of this, 50% is with thermal, 31% with renewable and remaining from hydro gas nuclear. Now within renewable, solar has nearly 72 gigawatt production, which is 54% contribution. Solar power generation has grown at a very rapid rate in last 10 to 8 years. And the target is to produce 280 gigawatt of solar power by 2030. Mind you, today it is at 72 gigawatt. So nearly 4 times target in the next 6 to 7 years. Clearly the potential in solar power is huge. In fact, Borosil Renewable is also trying to encash this opportunity and its capacity has grown 7.5 times in last 5 years. Especially there's a huge capacity addition in 2022 and 2023. So company is expanding its operation big time to leverage the demand in solar energy. Not only that, management has earlier planned to add more capacity in 2025 to expand the existing capacity from 1350 ton per day to almost double to 2450 ton per day. However, this 1100 ton per day capacity is on hold for now. I'll shortly discuss the reason why they have kept the capacity expansion decision in 2025 on hold. But for now, I hope you got a fair idea of Borosil Renewable business and the growth potential in the sector. Now let's try to understand the reason behind the roller coaster journey of Borosil Renewable share price. As mentioned before, Borosil Renewable share price has zoomed nearly 20 times during COVID and then corrected 50%. But again the share price is increasing. It's because company share price movement is completely linked to its business performance. If you look at company's P&L, it used to command 14 to 16% margin before COVID. But then margin zoomed to 38 to 39% in 2021 and 22. As a result, company's operating profit zoomed from 37 crore to 197 crore. That's 6 times growth in profit in single year. It again zoomed to 245 crore. As a result, company share price also zoomed 20 times during that phase. However, then operating margins contracted to 23% and then 16%. Although sales growth is still decent, but due to sharp margin contraction, company's operating profit fell down significantly. In fact, at quarterly levels, margins have fallen to single digit. As a result, share price also corrected significantly. Now what explained this erratic movement in Borosil Renewable operating margins? That's the most important question you must ask. And the answer is simple. Borosil Renewable does not have any pricing power in the market. 97 to 98% of solar glass manufacturing in the world is controlled by Chinese companies. Although Borosil is the largest solar glass manufacturer in India, 80% of Indian solar glass market is still controlled by Chinese companies. Basically, during COVID, the Chinese supply chain was broken that created huge demand for domestic solar glasses. And Borosil, having the leadership in the domestic solar glass market, made huge profits. However, as soon as the situation normalized, Chinese companies started dumping solar glasses at very low price. That again badly impacted the solar glass prices and hence impacted Borosil profitability. Then second reason is removal of anti-dumping duty on Chinese solar products. It was implemented in 2007 and expired in 2022. As a result, the prices of solar glasses crashed in the market when Chinese players dumped their product in India at very low cost. On the screen, you can see the crazy fall across the solar module value chain. Management in their con call mentioned that the unrealistically low import prices have led to a complete erosion of margins for the domestic solar glass industry as heavily subsidized Chinese imports of glass continue to grow exponentially. We, along with other local producers of solar glass, have been appraising the government at various levels about the minus of imports and the impact on the domestic industry and hope that the government will listen to our plea went forth with the exemption from basic custom duty on imports of solar glass. In the meantime, the lower prices have seriously dented the profitability of all solar glass producers in India and brought the potential expansion in solar glass capacities to a halt. In fact, management clearly admitted that an improvement in the margins in the domestic industry would now largely depend upon the levy of basic custom duty on imports. The solar installation over the last few months have remained subdued despite a steep and unprecedented decline in the prices of solar cell and modules led by dumping from China as against an expectation of a phenomenal rise in view of very attractive prices of solar modules. So management has clearly mentioned that industry margins and their own margins can only improve if Indian government levy basic custom duty on imports. In fact, this problem is not just limited to India. Management has highlighted that the demand in European Union has suffered a massive blow from September as the customer deferred or cancelled their order due to inability to compete with deeply discounted prices of module imported from China and Southeast Asia. The customers have severely cut down production and are running only shallow operation in the hope to come back to a full production later. These customers have represented the German government as well as the European Commission, and some positive announcements have been made already. It is expected that concrete steps to revive the solar manufacturing sector in the European Union and Germany will be taken by end of November or sometime in December. Since Borosil European customers have cut down the production, it has to sell the products in Indian and other markets that are unfortunately low margin market. Management has mentioned that in lieu of these developments, our export from India, which command a better margin, will suffer a setback in the next 1 or 2 quarters. We have increased our sales in the domestic market, which unfortunately is at very low margin in lieu of continued Chinese dumping. This will further impact the average sales realization compared to the last quarter. So that should give you a fair idea about what to expect from Borosil in the coming 1 to 2 quarters. The margins will remain under pressure. Although let me clarify that companies' sales are growing. But the problem is due to Chinese competition that has badly dented their margins. Management has clarified that the immediate relief will come from imposition of basic custom duty. Now the question is, if management has clarified that margins will suffer in the next 1 or 2 quarters, then why the share price of Borosil is rising? In last 1 month, company share price is up around 20%. The answer lies in the expectation of again imposing basic custom or anti-dumping duty. When management was asked about when can the basic custom or anti-dumping duty be levied, management has mentioned that as matters stands today, the exemption is supposed to continue till 31st March 2024, after which the exemption is supposed to come to an end. We have been given to understand that the exemption will indeed end on 31st March 2024. Not only in India, even in Europe, the German industry and the European industry has moved the European Union Parliament and President of European Union and the President of Germany to take a very strong action in the market to protect domestic industry, and the matter has been considered very seriously. And there is a reasonable expectation that some very concrete step will be taken by government in Europe very soon. So if Europe also take concrete steps against Chinese manufacturer, the market will experience a boom. I hope you got a fair idea why Borosil Renewable shares are rising, because stock market is always forward looking and market expect the business to do well in FY25 on account of imposition of custom or anti-dumping duty in India and strong action in Europe against Chinese dumping of solar glasses. And that's a fair expectation. I mean, today, there's no level playing field. Chinese companies are heavily tax exempted in China and they enjoy low-cost manufacturing. As a result, they rule the entire world solar value chain with not just 20-30% market, but 97% market share. With that sheer power of dominance of Chinese companies, no domestic company can grow in any other country. So the government has to intervene and help domestic manufacturer. The key risk to the thesis is, what if government doesn't levy the custom duty or anti-dumping duty? This is something that will only be clarified in the future. Now, based on all these developments, you need to take a call regarding what to do with Borosil share. Company share prices have already started rising with expectation of government intervention, and if the taxes are levied, Borosil share price can fly. Having said this, personally I've realized that it's a very tricky stock to put the money in because at the end of the day, company does not have any control over the pricing and hence I would be very careful. Ideally, I like to invest in companies where the company have control over pricing so that the profits are stable. In fact, this is the very reason why domestic institutional investors have no stake in the company, even FIs have reduced their holding. Public has too much stake that makes it very volatile. So from my side, I've tried to share all the information I've gathered by doing the research on the company. Now, I would let you decide what you want to do with the company. Let me know in the comments what you think about Borosil Renewable. And if you find this analysis useful, do share it with your friends. Also, let me know which company you want me to cover next. I'll see you next video. Till then, take care.